Okay, Keith, let's keep going through our examiner secrets from FR then, and deferred tax in particular. So we know it's caused by temporary differences between accounts and tax rules. Now, you often get this because accounts depreciate their asset, don't they, at a certain rate, and tax use capital allowances at a certain rate. So the carrying amounts are often different. So in this case, if we're showing an asset of 400 and they're showing an asset of 300, we are showing more asset, which is the same as more income, both debits. So we are showing more asset. In the end, they will equal zero. So this is a temporary difference. So there is a deferred tax liability on this. Okay, so how much would the deferred tax liability be if tax was 10%? Well, you think you would debit tax income statement 10, credit deferred tax on the SFP of 10, because the difference, the extra asset that we're showing, like the extra income, is 100. That's going to be taxed in the future at 10%. So we debit tax income statement 10, credit deferred tax liability of 10. Okay, now it gets a little bit trickier than that. Same figures, we're showing more assets. Of course, it could be the other way round, in which case tax was higher than the accounts, in which case that would be a deferred tax asset. But anyway, we're showing more asset, more income than the taxman of 100. So there's a deferred tax liability. But this time we get told the deferred tax liability has a brought forward of 6. Tax is still 10%, but there's already 6 in the deferred tax liability. So what I do is I debit tax 4, credit deferred tax liability 4, because what I did is I calculated that I know my deferred tax liability should be 10, but I've already got 6 in, so I need to bring in an extra 4 to make it 10. So you only ever account for the movement on the deferred tax liability. Let's have a look at that in the exam then. Okay, we get told that the tax base is 180 less than the carrying amount. So the accounts are higher than the tax base. The accounts have more assets, like more income, 180,000 more income, more asset. So we know there's a deferred tax liability on this. And it tells me tax is 30%. So immediately you say, right, I know what the deferred tax liability should be. Should be 30% of 180, which is 54,000. Now, that is presuming that there's nothing in the deferred tax liability account already. I want it to be 54. I need to know what's in it already. And the question goes on to say, at the start of the year, there was 62 in it already. So there was more in it than I actually want there to be in it now. So I need to reduce that deferred tax liability, don't I? By 8,000. So then the question said, right, what double entry do you need? Well, I need to reduce the deferred tax liability by 8,000. So I need to debit the deferred tax liability by 8,000. So my answer must be C.